if Trump remains weak in the poll. Now, even a Biden's presidency may not be able to have a more constructive relation with China, as now there is a bipartisan consensus that the rise of China is a potential threat economically and to national security of the United States. So globally, what we have to worry is about a decoupling between US and China, a balkanization of the global economy, with a global balkanization of global supply chain, more import protecting policies of import substitution industrialization, and every country trying to protect their own workers and firms, fragmentation of the global economy, reshoring of economic activity and less FDI towards China, Asia, and emerging market, and the risk of deglobalization that will be reducing potential growth and increasing costs. That's a rising risk. So that's something we have to worry about. Let me conclude with some observation for some financial market. Until recently, there was a very strong rally in some equity markets, especially in the United States, where the drop recovered and we reached new high, both for the S&P 500 and for the NASDAQ. And the rally, of course, was the strongest in the tech sector, in biotech, in the growth segments of the market. Of course, S&P 500 having a lot of weight in pharma, biotech, technology, communication services, and NASDAQ. Other indices were doing less well. And of course, part of the rally was driven by many of these young traders joining the market, the supposedly Robinhood traders, pushing higher to frothy level the valuation of firms like Tesla, biotech, and vaccine firms. Now there has been the beginning of a correction, especially of those tech firms. And the question, is this going to be a minor correction? Is going to be a more severe correction, or a beginning of something more severe? Now, the positive that remain for the equity markets are several. First of all, we still have very, very easy monetary policy, and the new Fed strategy of a flexible average inflation targeting implies that the Fed is going to stay lower for longer, and the timeline on when they're going to stop doing QE, when they're going to stop staying at zero and then moving away, is pushed into later, maybe 2024, even 2025. So that's good news. And while we have a risk of a fiscal cliff, we also have a situation in which both parties need a fiscal stimulus, otherwise their own base is going to be damaged. And therefore, the possibility of a deal on fiscal stimulus is going to help the economy is still there. Secondly, as pointed out, market know that you cannot fight the Fed, and you should not fight the Fed, with the Fed being so accommodative. And until now, bond yields have been very low, and therefore the return from holding bonds has been close to zero on the short end, 60 basis points on the long end in US. So people say, Tina, there is not really an alternative to stocks. There's been a beginning of a tentative global economic recovery, and stock markets are forward-looking. And of course, until recently, we were in risk on and positive animal spirits that were boosting the markets. And of course, there is a hope, and not just a hope, that out of those 6 vaccine trials, some of them are going to be safe and effective. They're going to come soon, and we get immunized, and economic activity can pick up next year. What are, however, the potential negatives on the equity market?